According to the World Inequality Report, the top 0.001% now control 3 times more wealth than the entire bottom half of humanity, with billionaire net worth rising by 81% in the last 5 years. And despite the stock market having just reached an all-time high, homelessness is officially worse than during the Great Recession, with over half of Americans struggling to afford food. Raising the question, when did an economic collapse become more profitable than investing in our future? While the economy is supposed to be defined by the quality of the job market, the affordability of housing, and the cost of living for its citizens, the unfortunate reality is that when just 10% of Americans make up over 50% of consumer spending, with the bottom half barely controlling 1% of all corporate equities and mutual fund shares, it instead reflects the incentives of those who control it, leaving the price of the Dow to mask decades of underlying decay, only for the inevitable fallout to be socialized through another immense bailout, a framework that has turned the economy into a glorified casino following the worst economic collapse since the Great Depression. As a result of the Great Recession, Congress injected hundreds of billions of dollars through the Troubled Asset Relief Program into institutions deemed too big to fail, while the Federal Reserve expanded its balance sheet from roughly $900 billion before the crisis to about $4.5 trillion by late 2014, stabilizing financial markets and effectively signaling that the government will always step in to remove downside risk for large institutions, allowing them to benefit from rising asset prices during expansion while relying on public intervention to absorb losses during periods of collapse. As the economy began to recover on paper, with the stock market reaching all-time highs in under 5 years, most Americans experienced a wealthless recovery, as median household net worth took nearly a decade to return to pre-recession levels. National home prices, the primary source of middle-class wealth, took even longer at roughly 11 years, but this was most evident in the employment-to-population ratio, which did not regain its November 2007 peak of 62.9% until 2019, just months before the global pandemic, and has since declined again following recent tech layoffs, demonstrating why so many Americans feel and are worse off economically, despite asset prices reaching all-time highs, specifically in regards to younger Americans. For Millennials, the generation that entered adulthood during the fallout, wealth accumulation remains 30% lower than prior generations, while also carrying higher levels of debt. When you combine Millennials, the largest living generation, with Gen Z, they account for roughly 10.7% of total wealth, while Baby Boomers, who disproportionately benefited from rising asset prices, control roughly 51%, where research from Scott Fulford, a senior economist at the Consumer Financial Protection Bureau, suggests the economy actually never recovered from 2008, estimating the crisis created a permanent downward shift in the GDP per person trendline, resulting in roughly $28 trillion in cumulative lost output, proving that what followed the crisis was a complete restructuring of the economy itself, where rising child poverty, mass homelessness, and historic underemployment become secondary to a system that prioritizes maximizing shareholder returns. This shift towards an economy where the masses are becoming economically irrelevant, except when needed for a bailout, is most clearly seen with the AI bubble. A September 2025 analysis from Deutsche Bank warned that without AI-related investment, the US economy would already be in a technical recession, marking for the first time in American history that consumer spending is not the primary driver of GDP growth. And while these conditions would typically trigger immediate action to stabilize a weakening economy, when the system is no longer structured around the financial stability of the population, the priority becomes maintaining market performance at all-time highs. In 2024, roughly 53% of all gains in the S&P 500 were driven by just 7 companies. In 2025, they accounted for roughly 50% of total gains, with Nvidia, Microsoft, Apple, Amazon, Google, Meta, and Tesla now making up more than 1/3 of the entire index, marking the most concentrated share in US market history. At the same time, both Anthropic and OpenAI have reached a combined valuation of nearly $2 trillion, or the same as Walmart and JP Morgan combined, without either company being profitable. This AI hype cycle has even seen a failed shoe company have their stock rise by over 582% on a single day closing basis, with intraday peaks reaching as high as roughly 876% after simply changing its name from Allbirds to New Bird AI, overlooking the fact that we simply do not have the energy and water infrastructure required to sustain this level of computing demand, with nearly 50% of planned data centers already being stalled or canceled, effectively meaning that while artificial intelligence may eventually deliver on meaningful productivity gains, the reality is that this post-2008 economy is essentially being propped up on the hopes of rampant, large-scale labor displacement. To test whether artificial intelligence can actually automate human labor at scale, researchers from the Center for AI Safety and Scale AI released the Remote Labor Index, a benchmark designed to measure how effectively today's AI agents can perform real-world work to a professionally acceptable standard. In the test, state-of-the-art models built by companies like OpenAI, Anthropic, and Google were tasked with completing the same work currently performed by paid human workers under identical expectations of quality, accuracy, and consistency. The results show that even the best performing model achieves an automation rate of just 4.17%, with Oxford research suggesting that many so-called AI layoffs are less about actual automation and more about signaling the illusion of technological progress to investors, creating the appearance of innovation while masking broader economic weakness. So when there is essentially no concern for the economic reality that millions of Americans face, while hundreds of billions of dollars continues to pour into this AI hype cycle, the economic incentives begin to mirror 2008 all over again, as there is far more money to be made maintaining the illusion of growth than delivering real economic value, with the understanding that when the system is pushed beyond its limits once again, the losses will be socialized while capital can consolidate, assets can be acquired at lower valuations, and market power can expand even further out of reach. And while we find ourselves in a position where we either face mass unemployment or the largest bailout in American history, this concentration of power into the hands of a select few has enabled systems like surveillance pricing to offset declining consumer purchasing power. A study from the FTC revealed that intermediaries and major retailers are actively using personal data, including browsing behavior, location data, and inferred traits like new parent status to set individualized prices for the same products. The same pattern extends into essential purchases, where Instacart shoppers ordering identical groceries from the same store at the same time were shown different prices on nearly 75% of products, with some items costing as much as 23% more depending on the customer, ultimately costing a typical family an extra $1,200 or more per year, reinforcing a system where economic relevance is no longer tied to participation in the economy, but to the extraction of personal data, which is why I personally combat this erosion of privacy using NordVPN. NordVPN operates thousands of ultra-fast VPN servers across 200 plus locations, built to deliver secure protection against surveillance, cyber threats, and vulnerable public networks. At a time when threats are evolving beyond traditional attacks into AI-driven deepfakes and voice cloning, NordVPN has been named the best VPN with next-generation antivirus, with its Threat Detection Pro blocking over 60 million scams just in March, while also being the only VPN app to earn an independent anti-phishing certification. Threat Detection Pro is also designed to help you avoid malware by blocking dangerous ads, stopping you from entering malware hosting websites, and checking your downloading files before they can harm your device. And as this channel is built on the pursuit of a better tomorrow, NordVPN's mission is rooted in making the internet better than it is today, free from online threats, censorship, and surveillance, as originally envisioned when the World Wide Web was created. To take action before you become a target of malicious attacks, go to nordvpn.com/Cassidy and use code Cassidy to get an exclusive 2-year plan plus 4 extra months, all backed by a 30-day money-back guarantee, meaning you literally have nothing to lose. So thank you NordVPN for helping make the internet safer and for partnering with the channel. Alongside the rise of surveillance capitalism effectively bypassing the foundational principles of American society, you would assume that AI alone represents the most immediate and disruptive development within the economy. However, recent cases of insider trading point to an even more pressing concern, as geopolitical events are now producing life or death consequences that are increasingly being monetized within the system. Since the start of the Iran war, at least 4 major instances of highly suspicious trading in oil futures are now being investigated by the CFTC for potential insider trading. On March 23rd, roughly $580 million was bet on falling oil prices just 16 minutes before a delay in strikes on Iranian energy infrastructure was announced. On April 7th, nearly $950 million was placed on declining prices hours before a 2-week ceasefire announcement. On April 17th, traders executed a $760 million bet on lower oil prices approximately 20 minutes before Iran's foreign minister announced that the Strait of Hormuz would be open to commercial vessels. And on April 22nd, another $430 million bet was placed just 15 minutes before the announcement of an extension of the ceasefire, where these trades not only suggest insider corruption, but show the immense profit incentive of increased geopolitical instability. And to prove how profit is a true incentive, listen to how the potential destruction of an entire civilization is reduced to a question of market positioning.
This deadline that President Trump has set, 8 p.m., has threatened to destroy a civilization. How does an investor process that? Is it a bigger upside risk or downside risk?
Highlighting that the real concern is not the loss of human life, a worsening global energy crisis, the risk of mass famine, or the reality that 63% of Americans living paycheck to paycheck struggle just to put gas in their car, but rather how a select few can profit from this conflict while the burden falls on the broader public. And when we account for the fact that the only difference between the stock market's all-time high on February 19th and the one we have just reached is that the Strait of Hormuz, where roughly 20% of the world's oil supply passes, is now closed, it becomes clear that there is not an ounce of reality left in these dystopian economic incentives. And while there have been extremely detailed discussions on America's impending oil crisis, largely driven by the lack of reserves, as well as the historic gap between the physical price of oil and its paper valuation, I wanted to break down why even in the absolute best case scenario, we would not see any true economic normalcy until at least 2027. If the Strait of Hormuz were to fully open today, most analysts estimate that it would take between 4 to 9 months for global oil supply to return to pre-crisis levels. However, this does not account for the Pentagon's warning that removing the thousands of naval mines deployed throughout the strait and surrounding waters could also take up to 6 months even after a full ceasefire, severely limiting safe passage. This delay would also keep insurance costs elevated, as shipping firms remain reluctant to fully resume operations without clear guarantees of safety. And as these constraints would keep prices elevated, it would continue pushing nitrogen fertilizer costs to remain roughly 30% above pre-war levels, with a recent survey of 5,700 farmers by the American Farm Bureau Federation finding that around 70% are already unable to afford all the fertilizer they need, and nearly 6 in 10 report worsening financial conditions due to rising input costs. And since fertilizer represents 30 to 40% of global grain production costs, this would drive sustained increases in the price of wheat, corn, rice, and other staples, with the full impact hitting global food markets over a 6 to 18-month lag, disproportionately affecting lower income households and developing economies, effectively proving that regardless of the market reverting to all-time highs due to blind optimism, continued AI hype, or simply just another opportunity for some quick profit before a severe pullback, the reality is that the true state of the economy has not been accurately represented for decades, as the price of the Dow can never represent the millions of Americans who are struggling to make ends meet, where the abandonment of true economic representation and the growing irrelevance of the masses is further incentivized as it allows assets to be acquired at lower valuations, market power to expand even further, and wealth to remain increasingly concentrated at the top. And so what I hope that we're beginning to recognize is that there is a catastrophically massive difference between the actual, real-world economic reality that the majority of us are facing and the incentives for profit. When you have the top 10% of Americans making up about 50% of the consumer purchasing power, it's an industry's best incentive to serve the top 10%. In fact, it's in about everybody's best interest to serve the top 10%. So what happens when 50% goes to 55, goes to 60, goes to 65, goes to 70? We become more and more economically irrelevant by the day. And so what does that mean? We lose power. We lose our privacy. We lose our autonomy. When you have the bottom 50% of Americans already making up less than 1% of all corporate equities and mutual fund shares, do you think that we're going to benefit from rising productivity due to AI? No. Our economic reality is mass unemployment. And I'm here to tell you that as of right now, this version of, well, more jobs will be created, it's not real. If you look back since the 1980s, the majority of jobs created were in low-wage service roles. So what makes you think that all of a sudden these are going to be fantastic, amazing, life-changing, profitable roles? It's not going to happen. Okay, let's say it's going to create universal high income because these companies will be so profitable, there'll be so much money that they can afford to actually give back to the people. I'm here to tell you, there has not been a more profitable time in history than right now. Where's that profit? Like, the profit isn't coming to us. So all of a sudden, it's just going to be coming into our pockets? I'm sure if that is the case, there's a lot that we're going to have to give up for that. Again, it goes to the economic irrelevance. It goes to the incentives. That is why there hasn't been an economic collapse. You could argue certainly that 2008 was one, but the reality is that it's just been an economic decay. What we are heading to is the loss of the middle class and the have-nots. And what I've seen is every administration, every 4 years, it's a promise that things are going to get better. And what do I see is I see more economic struggles, more financial hardship. I get thousands of comments every single day. And hundreds of those are people saying that they don't want to be on Earth anymore. Right? They don't see the reason for continuing to go on to the next day. That's the economic reality that we're a part of. I get the opportunity to be able to speak with unique individuals that have the potential to make a difference, that have power, that have all of these things. My goodness, the amount of conversations that I'm actively having to chirp in and say, hey, we're supposed to be talking about the average person here. What about everybody is being forgotten? We are not supposed to be catering to the very finite, small percentage of people that are already doing well. It's like I am losing my mind. I had a call today. I did the call. I had to get in bed immediately after because I was so distraught with how just not relevant it was for the average person. In many ways, like what we were actively talking about could make the average person's life better, but it doesn't feel like that's the fuel. The fuel has to be that. But it's like people are invisible. It's like the people that go to a stoplight and you lock the car when you see a homeless person. People don't think of it as, I can't believe that was somebody's kid that is now at this stage in life. Or what has our country come to where this is what happens at every stoplight? We just lock the door and we don't make eye contact. That's the nation that we've become. I don't know. I just am, and it makes me feel like I'm like, there's been something since I was a little kid that was almost hyper aware. And so all I have spent my life kind of seeing was like adult hardship is what it felt like. I think I was very aware of what my parents were going through. And then I just kept seeing it. And I would see it with the kids I was going to school with. And then I would get made fun of from like girls that I was interested in or things. And they would always say, he's so quiet and he's weird and he doesn't talk. And it was because I was so focused on what can I do to help? And so, now I'm in the opportunity to do so. And I'm using my platform to call for community because that's what we've been tricked into thinking is that we have to be at each other's throats. We destroyed the nuclear family. One of the reasons why there is no incentive for them to make a better tomorrow is because, we're fighting amongst ourselves. We haven't stood up to them. And when I call for community, it's like, no, I'm not interested in that. I'd rather have an app or a petition or something that I can sign, something that actually works. And it's like, man, we're missing the mark here. We are fooling ourselves if we think that there is something bigger than community. And what does that mean? Do you know your neighbor's name? When was the last time that you went out in the area that you live and you picked up the immense amount of trash that is all over the ground? Because you're investing in your community. When was the last time that you did something? I had my neighbor, and she's an older lady, and I think that she doesn't like to be seen or something. I don't really know, but I try to help out in little ways that I can. And so we've had a lot of storms recently, and her recycling bin kept flying out into the nebula. And so what I would do is I would hear it fly down the stairs. I would go out in the rain and I would bring it back up for her. I didn't do that because I wanted to thank you. I did it because it was the right thing to do. I don't want to have an older lady going down the stairs in the rain to get a recycling bin. Those are the things that create community because somebody else might have seen that and decided, you know what, I'm going to put my best foot forward and do something. What conversations are you having at the dinner table? When was the last time you even had dinner with somebody? When was the last time you actually had a conversation with your parents that wasn't blaming them or you getting blamed for whatever hardship is in the area? Right? We're failing on so many fronts. And certainly it's because of economic hardship in many ways. But man, there isn't a price on a good conversation. There isn't a price for doing the right thing. You just do it. And so it's multifaceted. There's so many different things that are going wrong. But what can you do in your life right now? It's do your best. And it's trying to make a better impact in your life. And hopefully in the service of others. And I don't know. That's about all I have to say. If this was able to provide some value to you, I would greatly appreciate it. If you like the video, subscribe if you haven't already done so. I'm trying to do the best that I can. And so I hope that you want to be a part of this journey as well. I'm actively trying to do things to improve the situation that we're in. I'm not just, complaining, right? This is very difficult. And so I just want that to be said because I think it's really important that with the lack of leadership that you see that there are people out there that care because that feels impossible to come by. And so I want to show you that I do care and I'm trying as hard as I can. I'm getting like 5 hours of sleep a night. I'm exhausted. But I care so much that it's what fuels me to do this. And I think that needs to be said because I don't see that happening with other creators or other people really wearing their heart on their sleeve and saying, I'm going to provide you with everything that's wrong, but man, I care about this. I want this to be better. I don't want there to be haves and have-nots. I don't want my future children to see the world that we're going to become. The trajectory we're on is horrendous. So anyway, until next time, bye-bye.